Advised to like basically just dump their whole bag. Like having more liquidity in a project is always good. And so if you have a way where you can just sell into the floor, basically gets Jeets out and you have more upside that way. So if they do something cool too, like earning yield, that could be pretty interesting.
Like pulling something like sappy seals, right? And Avigachis, putting that in an LP. I wonder how that would work, right?
Yeah, or if you're like a LP for one of those pools, let's just say Sappy Seals or some shit. If you're like a LP and then people sell into the pool, then maybe after X amount of sells, you get a Sappy Seal from the pool or something. I don't know, but I think there's some pretty interesting things that they could do merging DeFi and NFTs.
I wonder how liquid staking derivatives would work with NFTs. Like you stake two NFTs in an LP, right? And then you get a token off of that. And if you really want to lever it up, you can post it as collateral on Aave and borrow against it. And then you just have this infinite loop. And perhaps royalties can become involved, right? So sort of like an anchor, but for NFTs. I remember with Anchor Protocol, you would actually earn yield, right? You would lock up your B Luna and you would actually earn yield off of that. So you would get paid to borrow, but there would have to be a significant treasury for that to happen. And of course, like at the beginning, the yield would be significantly higher for people to be incentivized to start using the platform, and that yield would go down over time. And with these NFTs, the prices can be absolutely volatile in their USDT pair, right? Like if you go on KuCoin, there's a little section that says NFT ETFs, and some of those collections dropped like 30%, 25% in a day. But relative to like their ETH pairing or their SOL pairing, they didn't really drop by much, which is which is crazy, right? And I think that's something that could be implemented within DeFi. Kind of have like a choice on how you want to lock up your yield. Maybe you want to like borrow against it in their ETH denomination, or perhaps their USDC or USDT denomination. Oh, by the way, like as we're waiting for RB and Naka, anyone here in the audience, feel free to click that request button. I'll bring you up. So we've got DeFi Daniel up here. I'm gonna invite him to speak.
Yeah, I think there's going to be some pretty interesting things that happen this year. Um, we brought DeFi Daniel up. Sweet. What's going on, man?
Hey, good afternoon, everyone. Hope you're having a great Friday.
Danny, have you ever used ETH DeFi like in its early inception, early 2020?
Yeah, no, so yeah, I was there for 2020 DeFi, but what specific is there a tool specific you guys are talking about?
Oh, we're talking overall. We're talking, how Aave V3 can perhaps implement something like borrowing against your NFTs, and perhaps something like liquid staking derivatives with
Hmm.
NFTs. Perhaps staking two NFTs in a pool, right, or a couple of NFTs in a pool, and then you know having a token that represents that LP position, and then putting that LP position to borrow against it on Aave, and wondering if there was a way where the end user can choose on how to borrow against it, whether on their USDT pair or on their ETH pair, right? And how exactly would that work, right? Because with V3, you're actually going to have an anchor protocol sort of thing where you're going to be paid to lock up your collateral. And I'm wondering, like, how exactly would that work, and would it even be possible, right? And if it is, how long is that going to take? Because these things do take a lot of time, and we're talking leverage on leverage here.
Yeah, that's exactly what I'm thinking. Yeah. So basically, um, like remember the Uniswap, I think it was the V2 that came out with NFTs that give you that, if you provide liquidity in certain region of that curve of the market, you get an NFT with that location, right? Everybody thought it's pretty cool, right? What you're saying is like you can just turn this NFT position into something that you can use it as a token to, borrow against or put in the market for someone to borrow against. Yeah, I mean that's it's pretty complicated, right? Like especially if you're talking about cross platforms or cross chains, how's that gonna work, right? Yeah, you're right. You said it, leverage over leverage. Um, where does it end, and what are the risks, right? The risk is another run of the bank, and
Yeah, it's pretty fragile.
yeah, exactly. Yeah, pretty dramatic and pretty fast. If we're talking about setting up some algorithms, some bots to do that for you, which probably get what most of the people looking for this are gonna do or are gonna hire. Yeah, you can have a fast collapse. And then Aave allows for what I call those like really fast transactions, right? Um, so if all of these positions they do not follow the same oracle, you can have a situation where someone could just I forget the name. I'm just kind of forgetting the name right now for that transactions that you can do in Aave. Like really fast transactions. So basically, you input multiple
Flash loan?
flash loans, flash transactions, yeah. You can potentially do that if your oracles are not if all of this is happening in cross platforms and they don't follow the same pricing. Yeah, someone could potentially just um, uh, put some real damage in this. I'm not a big
Yeah.
fan of I'm not a big fan of that, I understand that it can be done and the tools are there to make it happen, but I'm not a big fan of it because you can obfuscate a lot of the you can obfuscate liquidity issues by doing so, right? You're basically moving starting in a point A and then you're by point F here. You don't know exactly what's in between. What are the markets look like, and and again, that's why Chainlink is so powerful, right? Such a great needed tool because if you don't follow the same Oracle pricings on in every step, um, yeah, that's gonna
Yeah,
be
you could get liquidated from the spread.
yeah, absolutely. Yeah, it's gonna be a big trouble. And that's what I'm thinking, the way you explain it, King. If this were to happen and someone creates this, it's not gonna be someone like, me just typing in and, doing, it has to be a script. It has to be a bot. Somebody will have to set up a bot to actually do that for me. Otherwise, yeah, I'll be liquidated or I'll be nowhere's land, man. Like I'll be doing my thing on point D, E, F without knowing exactly what's happening in B, C, and that's I don't know. That's asking for trouble.
Is this something that perhaps is better suited for something like Celestia with blockchain modularity and sort of connecting with all other blockchains and make this ultimate platform? Because that's how I'm seeing it. To be honest, I think the next evolution, the next epoch of digital asset space technology is going to be coming to fruition with things like Celestia and Saga. So I think you're going to have a point where a lot of the innovation moves over to those platforms, and it's all about following the devs, right? And I think that's going to be pretty interesting. And of course, there's going to be some mistakes in the beginning, but that's what it's all about, right? You have a playground, you experiment, you see what works, you see what doesn't, and then you learn from that and you build something better. And I think that's why, for the most part, a lot of the dev action was concentrated on Ethereum in 2019 and 2020, and then you started having other protocols being created, and some of those ETH devs went to experiment on other chains like Avalanche and like Polkadot. But Polkadot is like 5 years away. I don't think that's anywhere close to coming to fruition. I'm not sure what their situation is concerning, like, what parachains they're going to have officially, or if their ecosystem is already built out. I am talking to someone related in that ecosystem, and I'm going to try to have him on to catch up with everything in regards to Polkadot, because I don't really see anything that's different between, say, Polkadot and things like AVAX subnets, and those things honestly pale in comparison to what Saga is building with their chainlets. Like, Saga is ready to go with hundreds of dApps built on it, and it seems like during this bear market, a lot of ecosystems have fallen into complacency because a lot of them have gotten bailed out through some VC money, and they're just riding the wave, going on Twitter Spaces, just beating around the bush. And I really haven't seen any strides on other ecosystems outside of Cosmos with things like Celestia and Saga.
See, we got Naka up here. What's going on, man?
Hey, buddy. Yeah, doing pretty well. I had a bit of a cold, so I've been a bit out of the game for the past kind of 5 days or so. But yeah, I mean, macro-wise, things look a lot better now than they did, say, a month ago. I posted a very funny exchange that I had in November. Let me just put this into the nest. Actually, people might like this. I'm just going to try and put that in now. Yeah, so it's from Jailer Crypto, also known as Enchiriadon 47, who posted basically at the Pico bottom, "Why are you so stupid and not able to predict the future like me? Because I'm one of God's favorites."
Naka, I don't think that's even worth noting when you had Avi Bleidenstein pick on you on Christmas. On Christmas
That's true.
Day.
That's true. He fucking did as well, didn't he? He did as well. I said, look,
picked on you, dude. He picked on you, man.
I said we can go to 14K by the end of 2022. Okay, we didn't go to 14, but we got within 1.5K of that. It's pretty close, and we can still go to like $1 million by mid-century. And he was like, "Ha! They think we're gonna get another cycle." And it's like, jail,
Yeah.
jail.
Yeah, dude, he got arrested
fucking
for
sent
picking
to
on
jail.
Naka, dude.
I dare you to arrest me.
No, he didn't. He got arrested for bear posting the bottom.
Pretty much, man. Pretty much.
The macro. I'm kind of the opinion that probably the macro bottom is in terms of price, or maybe it gets sort of deviated a little bit later on in the year, but probably it's basically in for the most part. So we could still hit 14K. We could pump it up, get people excited, go to 30, back to 14, crush everybody, and then up.
I think that's. I think truly Max Payne would be like revisiting that pre Terra collapse level at 40K, 39K, and then just having like a COVID sort of nuke, like 50% out of nowhere.
It doesn't even have to be a COVID nuke. I mean, one analog that I've been looking at, and that looks better and better over time is the post World War II analog, right? So after World War II, America had a huge inflation problem, right? And the reason it had a huge inflation problem was actually similar to the reason that we had one now, which is an exogenous event. In the late 1940s, the event was World War II. So during World War II, there weren't enough consumer goods being produced because all the factories were making war output. When the war ended, there was inflation because there were more and more people. Men were coming back from the front. They were coming back from the war, and they were chasing, a limited supply of consumer goods as the economy ramped up to back into peacetime production. So you saw rampant inflation. The Fed had to deal with it, and basically the effect on risk assets was like kind of like a 4-year crab. So, it dumped kind of the same amount we've dumped. It kind of pumped up a bit, went and revisited the lows, pumped up a bit, went and revisited the lows again 2 years later, and then it lifted off for like a huge bull market that lasted into the 1960s. So, we could be seeing something like that happening. This could be the top, and we just go back, retest sort of 14, 15, and then back up again, just completely wreck everybody. It could be that we go to 30, could be that we go to 40 on Bitcoin. Honestly, I actually can't tell how much higher this is going to go. But I think
RB finally.
I think the bottom's probably mostly in.
RB, I invited you up, brother. I think this is a mixture of 2019 and 2015, and we've already had that 2019-esque sort of run on alts, and even for BTC, right?
Well, it depends on the alt though, man. If we analogize this to 2019, right? This is like when we're still like slightly under 5K, right?
Yeah.
We haven't gone to 14 yet, right? 14 would be like
38.
No, more than that. No. Like 14K.
It'd be 50. It'd be like 55.
It'd be like 50 to 52.
Yeah,
right? So we have a long way to pump. We still have most of the pump to go if this is 2019, right? So you're still early, unironically. Right? This is unironically still early. If like normies are not talking about this. CT all think the bottom is in, right? CT think it's over for bears. Normies aren't talking about crypto, right? I have like a different Twitter account. I have Facebook. Nobody's fucking talking about it. So I do think you're still early if this is 2019. I think it might be like 2019, but it really depends on, this kind of like macro factors, right? Because in 2019, legacy indices just fucking pumped to straight to the fucking moon, right? And it's not clear whether they're going to do that this time. I mean, people are very bullish right now on legacy, obviously because it's broken out of its downtrend. QQQ, SPX, everything's broken out. So that all looks bullish. Anyway, I wonder what RB has to say. He's a man.
Yo, what's up, RB, man? We haven't spoken since those summer spaces, dude. Those.
It's been ages.
Man, those summer spaces were awesome, bro. the hero of Xmon, RB, the only altcoin that he loves with all his heart. He has an Xmon tattoo, brother.
Beautiful thing.
What's going on, man? How have you been, dude? It's good to see you, dude.
Yeah, I've been well, mate. Just sort of keeping a low profile this year, really. Trying to spend less time on Twitter.com and just focusing on things I need to get done. So yeah, I'm sort of I've been trading much more than crypto. I've been trading more FX recently, to be honest, which has been incredible this week. Like the news-driven moves this week have been insane. It started off with New Zealand dollar on Monday or Tuesday night, and today and yesterday we've just got these beautiful setups on US dollar pairs, and they've just had crazy moves today on the back of NFP, which has just given continuation. So FX has been a really good market this week. Crypto wise, it's just kind of, I don't know. I don't like trading these like small rotations in crypto personally. So I'm just sort of waiting at the moment, really. I think we're very, very close to a correction. The question for me is whether we have another spike higher just to fuck everyone over one last time before we dump. Momentum to me just looks completely fried, and I don't really have much of a read on what's going on in the order flow, but I don't know. It just feels very exhausted to me. And with equities rejecting off these key swing highs in the week as well, I think everything looks a bit heavy and due for a correction. After that, we'll see, right? I mean, it's been some alts are up like 5x, 10x. It's been a very extensive rally, and I think it's pretty overheated and due for some kind of pullback. There's no real demand. If you look at total now, it's just rotations, right? So there's no new money coming into the capital, and there's no new money coming into the market at these levels. It's all just rotations now. So I think we have to go lower to find new buyers, essentially, and then we'll see. I don't really have a strong take after that. I'm not convinced that the bottom's in at all, but it could be, and we could just end up establishing some kind of macro range here longer term. But given that we only spent a month at the lows or so, I think we just spent, we nuked in November off the FTX stuff and then spent sort of a month just crabbing around at the lows in December. That's, for me, is not like a long period of accumulation, which I can rely upon as a bottom. I think, I'd like to see price trade sideways for much longer to convince me of that. I do think it's more likely that the Bitcoin bottom is in than the ETH bottom, personally. I think if you look at market structure on higher time frames, ETH needs to go a lot higher to reclaim monthly structure, and I don't think that's going to happen. But Bitcoin could probably do it, and that for me would probably be another signal that Bitcoin has bottomed at least. But I don't really know. I just sort of, I don't really care either. Like, for me, I've been selling spot this week. I think we're close to a pretty sizable correction, like 20-30% correction. Shouldn't surprise anyone at this point who's been in the market for more than at least the last cycle. So books are super thin. I think when it does unwind, it's going to be pretty rapid puke, given how long we're crabbing around here. But we might just trade sideways for longer, right? We might just trade sideways for another few weeks or something. I don't think we will. I think we're very close to puking, personally. And it's just whether we get another move higher. Like, I don't really. It's very difficult unless you're sort of. I mean, I haven't really been trading Bitcoin much this week, but unless you've been looking out for shorts around these highs, it's been actually quite difficult to find an actionable setup. So for me, there's nothing really clear from a swing shorting perspective on Bitcoin at the moment. I think alts are probably going to be easier, and I'm just sort of waiting. But yeah, I don't have a long-term read. I think it's very uncertain. Like, if inflation upticks again and rates have to go up again, it's like, at the moment it feels like all of the bad news has happened and the market's just desperate to get long. I heard an interesting perspective about what institutional investors are up to at the moment, and how in a bear market, no one's really at risk of losing their jobs because everyone's expected to lose money in a long only fund. But when number goes up like this, the psychology is quite different, and how many you need to perform when number go up. So is that attracting capital into the markets at the moment? I really don't know, but it's an interesting thing to consider. I don't know. It all feels a bit mental to me. It all feels like it's quite discombobulating. You need to kind of suspend your disbelief and just trade the technicals and the order flow. But anyway, sorry, I don't have anything more insightful to say, but nice to come and speak anyway.
I have a question for you, RB. Do you think that we would have eventually reached those lows had FTX not happened? Because I'm in the camp where I think BTC would be trading much higher had that never happened at all.
Yeah.
I think a bunch of normies are like still scared off from the whole thing. Kind of like Naka said, like, nobody outside of CT that I know personally is talking about it. I was just anecdotally talking to some of my friends who are like very, very casual market participants, and I was like, yo, crypto's pumping. Like, there's a lot of good plays lately. They're like, what? I haven't even looked. And so, yeah, I think a lot of them are still like kind of scared off from the industry.
Yeah, I think that's normal. I mean, I don't know. Like, it's kind of a moot point, isn't it? Because it happened. So, whether or not it would have gone there had FTX not happened is kind of, it's not, to me, it's not really a particularly relevant thing because it's happened. So we have the price history now.
I mean, you get one of these every cycle. It was Cryptsy in 2018. It was fucking Gox in 2015, like 2014. You always get them. And the reason you get them is because when number only goes up, nobody cares about, accountability, safety, trust, that kind of stuff. It's only when number goes down that the frauds get exposed. So that, yeah, there's always going to be one of these. Like, it's, when you get bad weather on the roads, when the roads ice up, you're going to get car accidents, and it doesn't really make sense to say, but what would have the traffic would have been fine this winter if the roads had been icy but there hadn't been any accidents. Well, yeah, but that's just...
Naka, I
Well,
wanna
the
give you some
point,
caution. I
basically,
want to give you guys some.
oh, sorry.
I want to give you some caution, Naka. Our boy Payne here has actually been locked up in an igloo in Texas. There's actually been a snowstorm, so you might not want to use certain words. Uh,
No, it's okay,
our
bro.
boy here, he's going through an ice age, brother.
Trigger warning for people who are in cold weather, but when you have bad weather, it causes road accidents, right? When you have
That
a
is
bull
true.
market, it causes financial accidents. Just because, every time somebody's going to be a deep, somebody's going to cheat, and because everything is green, nobody's going to bother to check, right?
Yeah, I think more so the point I was trying to make is just that considering where equities are, crypto as a whole is still probably undervalued. So it's like, I think once people kind of sit there and realize, like, oh wait, SPX is only like 10% off from the high, BTC is still down, 60, 70%. So I don't know, maybe it could eventually gather some retail interest, and if we just range here and then continue pumping, I think we could probably see a really, really sharp move.
Yeah, I'm
And I
of the
think
belief that the
alts,
worst is already behind us. I think
yeah, I think so too.
think yeah, and call it left curve, man. But dude, we had Solana, the prized possession of the entire market, do almost the exact same retrace that ETH did in 2018, right? ETH went from, what was it, 1,400 down to
80.
$80. But the thing is, $80 was a wick. That doesn't really count. Wicks don't count because BTC actually put in its low in late November at 15.4 or 15.3. If you go on KuCoin, that was a small wick. And then alt just bled out, and I mean completely just bled out up until mid-December. Dude, AVAX didn't even break its July 2021 lows. Neither did Phantom, right? But Sol did. And a lot of retail were in things like Sol and Cardano, and both of those assets depleted by 50% after the week post FTX. And you had Sam go on Spaces just dicking about, man, wasting time, and it was more of a slow bleed. So I think that's where some people were like, oh, the bottom isn't in yet, but when you start having capitulation in other assets like Coinbase stock and Tesla, where retail does hide when they're not in digital assets, there's a probability of upside occurring. And I think that first week of January, where we had our friend Sisu and the other individual say that they're actually seeing some positive flows into the market. But we have reached the point, like RB said, where it's rotations. And the only hope, like if you're bullish at this point, or not at this point, but like short term, like in the next couple of weeks, what you do have on your side is the USDC and BUSD being printed. And I know it's a bit of a psyop, but the probability of that being added as a safety gate for certain levels not to be broken, given that there are a lot of liquidations now below the 2017 all-time high, there's something to be said about that. And like I said yesterday, I'm excited. RB's excited. Naka's excited. Dan is excited. Payne is excited. We're all excited, man. It's a beautiful Friday afternoon, and we're here united by the power of friendship. If anyone wants to come on and join the conversation, feel free to do so. RB, I never asked you, man. I know you've been trading for a very long time now, but how exactly did you come into the cryptocurrency space, brother?
Well, like many others, I was, buying illicit substances on the darknet initially, and got interested in. I was more interested in Bitcoin than anything, and I think I was gonna. I almost bought like a couple of thousand Bitcoin in 2012, which regretfully I didn't. And then I put my first investment in 2015. So I've been in ever since then. That's it.
Have you ever used things like DeFi, or is it mainly just like perps trading and things of that nature?
Yeah, I'm actually pretty bad when it comes to on-chain. I'm very lazy. Yeah, I have used some DeFi stuff, but I need to, one of my regrets from the last cycle was not doing more on chain. So I guess I'd like to do more of that. But at the moment, I'm sort of, it's difficult because, do you, for me, I like to follow volatility across many different markets. So I'm not sort of, so crypto centric anymore. And that makes it more and more difficult to follow what's going on. But I think when crypto is in an uptrend, it's more just a case of sitting on your hands and holding spot positions, so on and so forth. So I think there is probably a less is more approach to next bull cycle. I'm going to take a less is more approach to the crypto market and not worry so much about margin trading. So, but yeah, I've regretfully not done enough on chain historically.
RB, and the most important question of all, how did your haircut go, man?
Oh, it's really good. I'm very happy with it. My girlfriend likes it as well. So yeah, it's works out well, mate. Although every time I go to the hairdressers nowadays, I look at myself and I think, fuck, I look older. And I look older than I did last time. I look older than I did 4 weeks ago, I noticed something different about my face. But I'm still handsome, so it's okay.
And you're shredded to the gills, dude. You look like Z's.
I'm doing okay, mate. For 39, I'm not unhappy with my appearance, which is not a bad thing to be able to say. Like
RB, and I know
I know people, I know people my age who, frankly, could pass for like 50, and so I'm grateful that I have better genes than that.
RB, so given that you come from a trading background, what's one thing that keeps you refreshed? I mean, you've been trading markets for what is it, like close to 2 decades now?
No,
Decade and a half?
no, mate. I didn't come from trading when I was younger. I've been trading for like 5 years, 6 years.
Oh
Yeah.
shit. I thought when you were saying like you were buying things on the dark net or something, I thought you were talking like 2010, 2011
Yeah, no,
sort of stuff.
I've been in Bitcoin since then, but not trading. Yeah, just as an investor.
Jeez, and how was the user interface like back then, dude?
It was scary, mate. I mean,
I bet,
Mt.
bro.
Gox was terrifying. That's why I didn't buy in earlier, because I had to call my bank, get like a paper form. That was how I had to send money to Mt. Gox. I had to get a paper form,
A paper
posted
form.
to me from the bank, complete it, and then take it. I had to take it to the bank or post it back to some kind of head office somewhere, and wire money to this Japanese bank account, and then hope that it all got linked to my Mt.
Jeez.
Gox
That's the
account.
trenches, damn.
Yeah, it was all through this Japanese account, and so I didn't do it. I didn't go ahead because I thought, it's too much risk of losing this money. Regretfully, I couldn't even do it online. I could not do an international bank transfer online. So yeah, different times, mate. And then you had website services like Local Bitcoins, where people would literally meet up and pay each other cash for a Bitcoin.
Yeah, I'm never doing that.
And there were all sorts of weird services like Bittylicious, where you could use PayPal at the time.
Bittylicious.
Yeah, and like the arb opportunities were nuts. So the spreads were huge, and the price difference across exchanges was insane. So, but it was there's no efficient way of capturing that value. It was just a bit of a mess at the time. But yeah, it's crazy how much the space has grown.
Dude, yeah, man. Like I hadn't even downloaded Venmo until a couple of months ago, and man, when I saw that you were able to buy BTC and ETH, I was just flabbergasted, man. I
I
was
don't
like,
think you can actually
whoa,
send them
what
around
is
though, Wabi. You can only have exposure to the price. So it's like,
really?
yeah, it's
No.
pretty nerfed.
Oh gosh, let me
So
check
is
real
it a
quick.
derivative?
Yeah, it's like
Let
the
me
same
see.
as Robinhood, where like you can buy it, but you can't. Like all you can do is have exposure to the price. You can't actually send the crypto to
But
people.
in
I
Robinhood, aren't
thought
you
they
able
changed that. I thought they changed that. I thought it started off like that,
Oh,
but then they
Robinhood, they
changed
might
it.
have changed. I think they actually did change it in Robinhood now that you mention it, but I'm not sure if they've changed it with Venmo yet.
Yeah. So I see we have someone new up here. His name is Dow Chemist. I want to welcome you to the show. My name is Wabi. We welcome you on behalf of Because Bitcoin. I usually host these spaces. I'm sorry, guys. I was getting a call. Sorry that I cut off there, but my name is Wabi. I host these spaces almost every day. Usually I host them at 7 p.m. Eastern time, but when we have certain guests on with different time zones, it might be a little bit earlier, a little bit later. We've had people from the VC space, the dev space, and also the founder space, and also individuals from within the community. They can be traders, they can be podcast hosts, or people from within the Because Bitcoin community. And we want to welcome you, man. Thank you for taking the time out of your Friday to join us in the conversation. What's going on, my man? Good to have you here. Welcome.
Hey guys, hey, thank you for having me on stage, man. I appreciate that. Yes, first time I'm on this space, I think, but I see a lot of familiar faces. DeFi Dan, Nakamoa as well, and the topic that you guys are talking on was very interesting for me because I'm more of a hodler than a trader. But I think what you're seeing in DeFi is actually the financial primitives. They're really, really powerful for traders, right? And I'll just touch on a couple, but I think you guys can imagine there's a lot more out there. And I think that's a big change from what the space might look like 4 or 5 years ago towards now where we have like really mature type of financial instrument that if you're like a JP Morgan trader or a hedge fund, manager, those are the tools that you require to make sure that you're getting entering the right position, right? So there's, for example, something like the crypto volatility index, which so far has worked really well. It's the CVOL, and it basically ranged from 0 to 200, and it's kind of like the equivalent of the VIX index, right? Like the fear index in traditional market. We actually have the equivalent in crypto now, and it was designed by the designer of the VIX index. So he looked at the option market for BTC and ETH, and based on that, create an algorithm to tell you how much fear or confidence there is in the market. So for the people that, for example, wonder if the market is currently bullish and bearish, the CVOL so far has been a pretty consistent and accurate index to give you a sense of how much volatility or fear or FUD there is in the market. And that's tremendous because it's maintained on chain. It's transparent because you can actually look at the smart contract and you can actually invest based on that. And I think those type of innovations, when we talk about trading and hodling, we don't really appreciate those things. So that's one. The other one is a bit more complex. It's called the IPOR. And if you guys are into macros and geopolitics and trying to figure out if the dollar is going to go up and down, if we're going to move away from it, interest rates are the nerve of the economy of finance, right? And once again, we're having the same thing. Like, you have the interest rates, the 10-year yield curve, right? We have the same thing now in DeFi. And so all those things, right, for now, they're happening on Arbitrum and they're just like maybe a couple months old. They kind of point the route to a institutionalization of crypto, especially of DeFi. So if you're in the space and you feel like you're early, uh, the things that we're about to see right now, I think those are 10x's, 50x's, 100x's on the space, because now you not only have retailers that want to trade crypto, you now have tools that institutions require to make sure that they're making the right trade. And now they can actually look at crypto and say this is a mature space for adults that actually want to enter the market, maybe land, maybe hedge, leverage, all the different things that you used to do in traditional market. We have the same thing in DeFi, and I think that's massive. So if you're a trader or hodler, it's a good time to be in the space.
Yeah, I agree with you, man. I think things like money markets are going to become a thing within the digital asset space. And I think things like Say Network and Injective Protocol are going to be some good platforms for those markets to be hosted on DeFi. And ultimately, I think the new epoch of innovation, which again, it's going to stem from blockchain modularity and also rollups as a service. Celestia and Saga XYZ. I believe those products will be rolling out like I think later this year in Q4, late Q3, potentially first half of 2024. From the way I see things, but I'm not sure. I'm not in the internal devs team. Don't quote me on that. But hey, man, it's good to have you up here, and hopefully you can be a consistent individual in the show, man. It sounds like you're very knowledgeable. And over here, because Bitcoin, we do like to cover other markets. We actually have 3 shows here on Twitter Spaces. We have Market Check, which goes over more news-driven and price-driven sort of spaces when it comes to the majors like BTC and ETH, and again news-driven stuff. And then we usually have Market Talk, which relates to, like as you said, things like the dollar and the broader macroeconomic geopolitical discussions. And then with myself, which is typically the last show of the day, I go over all things digital assets and Web3, whatever you want to call it. So it's good to have you here, man. Feel free to follow us here because Bitcoin. Would love to have you up on our panel as a consistent speaker if you'd like. I do these every day, so I'll follow you after the show, man. Good to have you here, brother. Good to have you.
Thanks, appreciate it. Give you guys a follow as well.
No doubt, man. Sounds like you're at the mall, man. Hope you enjoy your Friday. Thanks for joining us, man. So, RB, have you been looking at any of these new developments within crypto, or have you just been looking at the price? And sounds like you're just enjoying your life, man. You're touching grass, breathing fresh oxygen.
Yeah, I'm actually this year I've just taken a slightly different approach. I'm just trying to spend less time in front of my screens, to be honest. So being a bit more selective about my trades, and it's win-win because I think you spend it's very easy to spend 12 hours plus a day behind a screen, and when that happens, when you do that, you're just gonna be tired, and you're not going to execute as well when the opportunities do come around. So rather than thinking, I want to capture every single opportunity in every single market, I'm more like, well, I'm just going to take the best opportunities in whichever markets are presenting them at any given time. And that's working well for me. Like this week, I think I took like a couple of trades on Monday. I was out Tuesday. Yesterday, I got into some positions, rode them out today, took one trade today, tried to take a Bitcoin trade today. But overall, I took like 6 trades this week, 6 big winners, right? And like we're talking like 6 to 12 R plus trades each. So why bother taking like little scalps for 1%? Why bother trading the 1% rotations on Bitcoin when you can look across different markets, particularly FX this week, and just take those best setups. So yeah, I'm sort of very happy with this approach. And yeah, I mean, in terms of new developments in the crypto space, I've never really been that bothered about the tech personally. For me, it's an interesting market, and I know that there's loads of value to be had if you understand the tech better and all of these things. But yeah, I mean, I'm quite good at playing altcoin rotations in terms of finding where the best setups are and where the volatility is and where the narratives are. But the tech itself, it's never been something that's particularly interested me personally, I'm afraid.
Naka, what are your thoughts on blockchain modularity? I know you've posted about that in the past. Naka, you there?
Hey, sorry, I just forgot to unmute myself. What was the question?
What are your thoughts on the new emerging technologies in the space, like blockchain modularity? I know you've made little posts here and there, but not really into detail. If you wanna cover that, brother.
Yeah.
Like, do you think these sort of like new well, not new markets, but legacy markets could be implemented and be hosted on things like blockchain modularity on systems like Celestia, right?
When you say legacy markets, do you mean like the S&P? You mean like trading stocks?
Yeah,
Chain?
things like that, like
Right.
derivatives exchange, like options markets,
Right.
and also like money markets, things of that nature, right?
Right.
Yeah.
So we are seeing some of that happening. Now, you can't do options on... So first of all, I don't really think that has much to do with modular blockchains, right? I think it's kind of separate. And the blocker for trading legacy instruments on chain is really about the dividends, right? Because it's easy to have a price oracle for the S&P 500 and then make a perps market for it, right? That's easy. But if you just want to like hold, you just want to buy and hold that, you're not going to get the dividends, because you don't get dividends from, a perps market, right? Most people who want to interact with the S&P 500 want to buy and hold. They want to own the stock, and so you can't own legacy stock on crypto, right? Because of these incompatible systems, or at least they are for now. And the block of that is legal. In terms of trading derivatives or options on the S&P, it's totally possible. I think basically Synthetics and Quenta, I think they actually already did that, or they looked into it or something, and there wasn't much of a market, but it's doable. I think that kind of DeFi of like trading legacy finance on crypto, I don't think it's going to be big. I don't think many people want to do it. People who want to trade legacy finance are going to go and open an eToro account, or they're going to open Interactive Brokers or something like that, and they're going to do it like that. If they want to own the stock, they're going to go to their bank, and they're going to have a brokerage account set up, and they're going to do all that stuff. I think the real win from modular blockchains is going to be more to do with how blockchain innovation works, right? So I'm actually pretty interested in this. This is a pretty cool subject, right? So let's say I want to start a new blockchain, right? So if we were like, say 7 years ago or something, or 8 years ago, in order to start a new blockchain, you would have to basically fork Bitcoin, you would get a proof of work algorithm, and you would have to actually get like a bunch of miners to mine your coin, right? Then you go to like 3 years ago, or 3 or 4 years ago, and if you want to start a new blockchain, well, you don't have to fork Bitcoin, you can use proof of stake, but you still need to get a community of stakers, you need to deal with like a whole bunch of technical shit. Now, more recently, the idea has become, let's reduce the barrier to entry for starting a blockchain, and you had the sort of app chains thing with like Cosmos, right? So there have been a flurry of these, small, shitty Cosmos app chains like fucking DVPN, Persistence, Cash. Like there's been like a whole bunch of these, and some of them have done well, like Rune is a Cosmos blockchain, right? So, to start one of these Cosmos chains, you don't have to think about consensus because Tendermint does it out of the box. You don't have to think about a lot of the technical stuff because you already get that. And I think the modular blockchains thing is just sort of that pushing that ease of getting started to a level where you might not even have to start your own blockchain, right? You're just going to use somebody else's blockchain, and you're just going to contribute one thing to the blockchain stack, right? It's like, it reminds me of kind of like developing a website. If you wanted to develop a website in the 1990s, you had to fucking code the website yourself. You had to get the pictures yourself. You also had to fucking host it, right? Physically on a computer, right? Like you would have to get a computer and put it in your garage, and you would host the website on that physical computer. So you would deal with the website, you deal with the coding, you deal with the security yourself. So, somebody could come and hack your website and you'd have to deal with that. You deal with, if you wanted people to register, you'd have to deal with the fucking database as well. If you want to do payments, you'd have to deal with like the fucking payment services providers, or even bank details. You'd have to handle customer personal information. So basically, if you were making a website in the late 1990s, in the very early days of the internet, and I'm old enough to remember that. I didn't make a website then, but I used some of these early websites. You basically had to do everything, right? Whereas nowadays, if you want to make a website, you probably just fucking go to Wix or something, and like everything is going to be plug and play, right? You don't have to host. You don't have to do the code. You don't have to do the database. You don't have to do any of that stuff. You literally, all you do is the thing that you want. And I think that's kind of where modular blockchains is going, right? So if you want to provide, some kind of service, you might be providing a service to the customer. It might be more of a service that other sort of, businesses can use. You're just going to provide that one service. It's like a Lego brick. You're going to build that one Lego brick, and you're going to put that on top of all of the other Lego bricks that everyone else has already built. And I think that's kind of going to be the power of modular blockchains. I think Ethereum is going to be pretty important as a consensus layer in that, but then Celestia is going to be important as well. And then there's going to be, fucking Arbitrum, Optimism, Metis, all of these things, they're going to become execution layers. So we're going to see the separation of execution and settlement, right? So if you want to provide an execution environment for people that's fast, yeah, you'll just do that. Like Arbitrum. Arbitrum just provides an execution layer. Arbitrum doesn't provide the consensus. The consensus is Ethereum, right? And that's going to be huge. So I'm bullish on this. I'm bullish for very sort of deep fundamental reasons to do with how an industry can become more productive if people cooperate more and compete less, right? So if I just want to innovate just on the execution layer, I shouldn't have to build a whole new consensus layer, right? I should just do the execution stuff, and I send that consensus stuff off to Ethereum, and fucking data availability even goes to somebody else, right? So you have this thing right now with Bitcoin has these like ordinals on-chain NFTs, right?
Oh gosh, that's
right,
bro. That is
completely whack. It's like a whole fucking block on the Bitcoin blockchain is just one NFT, right?
Naka, weren't we talking about this months ago? Like I think that whatever Taro is going to be with Lightning Labs, we were discussing that on Spaces, and then
right. But this isn't Lightning. This isn't Lightning. This is mainnet Bitcoin. This is layer one Bitcoin. This is not on Lightning. This is on fucking main chain.
Maxis are really mad too because it's taking up.
Maxis are fucking losing their shit.
Because it's taking up so much block space.
It's a whole block. A whole block is just
the block space.
A whole block. No transactions. No peer-to-peer electronic cash. Just JPEGs.
That's
Fuck you,
exactly.
Right?
That's how we get to 100K, right?
Yeah, that's
NFTs.
it. Because that's it. Because people literally can't sell because they can't get a sell transaction because it's all fucking JPEGs,
dude. And
you get your Bitcoin and you try to transfer it to the exchange to sell, and it's like 6 days. Fuck you. JPEG time. You got to wait 6 months, right? You got to wait 6 months. No selling. Selling is haram. But seriously, there is a point to where I'm going with this, which is that the whole idea of having a JPEG take up a whole Bitcoin block is really wasteful, right? Because it will be much better, and this is going to be the modular blockchain's way of doing this, is you just record the hash, just the hash of the JPEG is recorded on Bitcoin mainnet, and the actual JPEG is stored somewhere else. So, for example, in the Ethereum ecosystem, if you want to do an NFT, you might mint it on Arbitrum, right? That would be your execution layer. A whole bundle of Arbitrum transactions would be sort of bundled up and committed to Ethereum mainnet for the consensus, and the actual JPEG will get sent to Celestia or Polygon Avail or one of these data availability layers, right? And that data availability layer, all it does is store data. That's all it does. You can't, Polygon Avail, you're not going to be able to do DeFi on Polygon Avail, right? It doesn't do anything. It's literally just a warehouse for data. That's where your JPEG will actually be stored, right? The fact that you bought and sold it or minted it will happen on Arbitrum, and a long-term record of who the owner is will go on Ethereum, right? So you would have Polygon Avail, Arbitrum, and Ethereum as 3 separate blockchains that are all cooperating to provide this JPEG. And the advantage of that is, Ethereum, which is the one that has the really valuable block space, is only using a very small amount of a block to tell people the absolute minimum amount of information they need to know, which is just that you own that JPEG. But it doesn't tell them what the JPEG is. They have to go somewhere else. They have to go to Polygon Avail or Celestia or somewhere else to actually see the JPEG, right? And when they want to trade the JPEG, right, they want to transfer ownership. You know, me and Wabi could trade that JPEG back and forth between ourselves 500 times over on Arbitrum, and we're only paying Arbitrum fees. We're not paying mainnet fees to trade that JPEG. And there's only once a whole bunch of these trades have been aggregated together, the final ownership is recorded on Ethereum mainnet again, right? So that's the power of modular blockchains.
Exactly. And that's why here, because Bitcoin, we love Cosmos, and we are absolutely ecstatic to add value to Saga and Celestia. Absolutely love them, dude.
Yeah. I mean, I'm bullish on Celestia as well, because I think they really get this. I'm less bullish on Atom and Cosmos because I think their approach is actually kind of a bit of a mess. I'm not a fan of the AppChains approach, because AppChains is a bit different, right? Like the way this would work on AppChains is you'd have like an app chain on Cosmos that was just for JPEGs. So you do everything JPEG related on that app chain, and then.
Oh crap! Hold on, our producer's having problems. Give me a sec, gentlemen.
So anyway, like you'd have a Cosmos app chain that was just for JPEGs. Now that sounds great, but the problem is if you have an app chain that's just for JPEGs, you know, what if you want to do DeFi with the JPEGs and there's a different app chain for DeFi? You have a composability problem then, right? So I think this is kind of going to fuck the Cosmos app chain thesis, but I'm bullish Celestia because I think maybe they're going to sort of sort this out a bit better.
Yeah,
it's kind of like Cosmos is like the first attempt at modular blockchains, and I think it's probably wrong. It's probably the wrong approach. But, you know, maybe they'll course correct, pivot a bit, and they'll come out with something.
Naka, do you know anything about Saga? Saga X?
I don't. Tell me about Saga.
It's got the best approach to modular blockchains, I think, because for one, they have these things called chainlets, right? And so anybody who knows any language can basically code a chainlet. And so even like whether you know Move or like Solidity or whatever it is, Rust, you can basically use any language to code a chainlet, and then the mainnet Saga validates those chainlets, and then you also don't need gas to like run a chainlet. So someone could have, for example, a free-to-play game and could interact with like a free-to-play game that was run on a chainlet, right? And you don't need to like have gas or anything to like onboard people necessarily. You can just like basically have it to where you can trade and do transactions with no gas fees if the chainlet chooses to do so in that way. So it's like super flexible, and it's seems very posed to onboard tons of devs. So I think it's pretty cool.
Pain. Don't forget, gentlemen, don't forget that they also partnered with Polygon, and Polygon will be deploying their supernets on Saga. Like, I just want to put that. I want to put that very clear, right? Like what Polygon wants to do with Edge and their supernets, that's all going to be deployed on Saga. So I just want to put it out into perspective. I mean, this thing is actually going to be like the next epoch of innovation within the space.
Yeah, I was looking into it more, but one thing I'm not a fan of is I'm not a fan of the idea of, you know, no gas fees, because if you have no gas fees, right, that means it's free to spam. So you'll get mostly spam content. You won't get real content, you'll get spam. It'll chase the real users away. So you actually kind of do want gas fees, but you want to basically calibrate those gas fees to something that's like mildly painful for the user, but doesn't stop them from using it if they like the product, right? So for example, with PayPal, right, there's like a gas fee to make a payment on PayPal, right? You know, when you pay somebody on PayPal, they don't get all of the money you sent them. Some of that goes to PayPal, right? You know, all of these things have a gas fee. They have a cost of doing business. And I don't think you can't get away from that, because if there's no cost of doing business, somebody's just going to spam your shit and just destroy it. Certainly reducing the gas fee to, you know, like a reasonable amount, yeah, that's a good idea. So somebody's playing a game, and they want to, let's say every week they have to like claim their in-game NFTs or something like that, and they have to pay like 20 cents every week on gas fees. That's fine, right? That's reasonable.
Yeah, I think with Saga, like most of that stuff is going to be done on the back end. So, with that being said, Dow Chemist, I see you have your hand up. Go ahead, brother.
Yeah, I love what Nakamoto was saying, man. There's so many points on which I wanted to bounce off. The first one, I 100% agree with you that if we're just trying to replicate traditional markets, we're not going to be as efficient. We might get some people, let's say in third world, that don't have access to traditional market to join in, but it's not significant enough to, compete or phase up the traditional market, right? What I think is interesting is when you start to think about illiquid markets, right? Like real world assets that have been traditionally illiquid, whether it's your mortgage, whether it's billinating for cargo. Most of the financial assets in the world don't have a public market. They're traded by a few people in private settings between high net worth individual, and crypto can enable those illiquid markets to become liquid. And it's actually, I want to say, 70% of the financial assets around the world. So that's trillions of dollars that crypto can onboard, and we don't have to directly compete for that same slice of pie as traditional markets. So that was one point I wanted to make. Then the question to Nakamoto and maybe to the rest of the panel is on the topic of modular architecture, right? I almost feel like there's a moment where you understand that, okay, we can divide the blockchain into specific pieces that can optimize themselves to be the best at settlement, the best at consensus, the best at execution. So when you kind of get that picture, it almost seems like all the previous effort, the Cosmos, maybe including the Polkadot, all the other chains, even Algorand, what have you, they're almost outdated. It almost feels like it's just a matter of time before we just say, oh, those were like the first generation effort of what a blockchain should be. But eventually we move on to, as you guys were saying, Celestium as data availability, Arbitrum as execution, things like that. Do you guys kind of agree with that picture that it's almost like just a matter of people getting that awareness of what modular architecture is, and then once they get it, then 80% of all those L1s are really just outdated, just a matter of time before they get phased out?
Yeah, that's my thesis. My thesis is that, most of the L1s apart from Ethereum are not going to make it, right? But let's see. I mean, I was kind of expecting the bear market to last a bit longer. If the bear market is actually over, these are probably all going to get like a sympathy pump, right? At least.
Hey, see, we have someone new on the stage. His name's in motion. I am in motion. Just want to welcome you up here because Bitcoin man. Thank you for taking the time out of your Friday to join us in the conversation. If you're new, we're just having a roundtable with all things crypto and DeFi. Special guest for today is Trader RB. I want to thank him as well. What's going on, man? What are you feeling?
Hey, what's going on, guys? Yeah, thanks for having me up. I follow Dow Chemist and DeFi Daniel in here. What's up, guys? How are you? I just wanted to say that a lot of these technological advancements, if you will, are not really advancements at all. I mean, if you look at the foundation of Bitcoin, it's not a new technology. It's been around forever, and it's just kind of being brought into a new form of being, if you will. So once more software architects and people with the know-how enter the space, obviously they're going to go towards modularity and not a single monolithic gigantic beast, because that's not the proper way to do things anymore. A lot of these things are, like the layer twos, the layer threes. You're removing the virtual machines from the data layers, from the storage. I mean, this is common sense in today's computing world. You're not going to go out there and design an app where you're not going to store 2 terabyte videos in a SQL database, right? That's just dumb. So you're going to offload them onto something like IPFS or or what have you. You're not going to store them on chain. So this is the future. And I personally am in the zero knowledge space. So if there's anybody interested in that, feel free to ask away. Thanks for having me up again.
No problem, dude.
But I mean, if you have zero knowledge, then is there any point in asking you anything? Or
Well played. Well played.
I do want to give
drum roll.
I do want to give some caution here. We only
It's a
have
great dad
about
joke.
we only have about like 5 or 10 minutes left. Our producer has some work to do for our Discord. So if anyone in the audience wants to come up and give any last statements, feel free to do so. If not, we do have to start wrapping up here. I want to thank Naka for coming up here. I want to thank Dow Chemist for coming up here. DeFi Daniel, Field Pain, RB, and yourself in motion. I know it's a bit of a bummer that that you only got to speak now. So, with that being said, gentlemen, anyone in the audience, if you've enjoyed this content from myself, feel free to follow us here on Twitter at Because Bitcoin. I do these spaces every day. The time always varies, so you want to turn on bell notifications whenever the next segment of Crypto World Radio is going to be hosted the following day or on that day. I am trying to do somewhat of a schedule where the spaces are announced either the day prior or perhaps have like all the spaces announced on Sunday evening for our content for the week. But these spaces I do are a bit dynamic and they vary. Sometimes, they can be hosted earlier in the day, and our guest has to, accommodate us with their time. So I want to thank you for being patient with myself and here at Because Bitcoin when it pertains to that. I know I say that term a lot, when it pertains. Well, guess what, buddy? Get used to it. Deal with it. And and I just want to say, guys, it's been a pleasure speaking with all you gentlemen. RB, thank you for pulling up after your haircut. I hope you look like a stud, man. Hope you're feeling fresh. I hope your cat is happy and all of that. Naka, I hope you have a good dinner. I hope you research something new. I know you like to research like myself. In motion, we'll probably talk after this or something. Same thing with Dow Chemist. I hope you guys are able to make it to a future space, and we can touch on zero knowledge proofs on Ethereum and ZK stuff. I'm trying to get in contact with the individuals from Aztec Network, and I'm aware that their head of partnerships is down here in South Florida, like myself, and we're trying to do a collaboration with them here because Bitcoin. And with that being said, if anyone here in the audience knows anyone that is passionate about blogging and writing about all things digital assets and DeFi, feel free to reach out to me. We're looking to host our platform on our website to host anybody's work, and we're a growing community. So I just want to let you guys know that if you want your work to be out there, we're happy to use our platform to host it. And also, if you know any devs or upcoming protocols that are seeking to have more exposure to a growing audience and people that are enthusiasts about digital assets, feel free to reach out to me. I'm always looking to host people from VC, people from the Ethereum ecosystem, Cosmos ecosystem, even the Solana ecosystem. I'd love to get to know them. So if you know any devs, projects that are up and coming, feel free to reach out to me. I'd love to host them and talk shop with them. I'm always open to all things multi-chain digital asset space. And with that being said, after the space is concluded, in about 5 to 10 minutes after we close up, it's going to be uploaded onto our YouTube. But I think because our producer has something to do within our Discord, it's going to be uploaded by the end of the day, right, in a couple of hours. So with that being said, I want to thank everyone for taking the time out of your Friday and joining me here on Crypto World Radio. Tomorrow's episode is going to be at 2 p.m. Eastern Time, and we're going to have Grit Cult and Holder of the Fire. I know Michael had some scheduling issues when we were supposed to be hosting him, but it's completely fine. These things happen. And yeah, look forward to that. And take care. God bless you. Thank you so much for supporting us here because of Bitcoin. Feel free to follow us.
Take care, brother.
Cheers,
Yeah,
fam.
thanks for having us, guys.
Appreciate it.
Take it easy.
Yeah, later.
The trading current is just math. It's just math. It has a 95.45% hit rate when we deviate outside of CP2 and CN2. All you had to do is recognize that 95% of the time when we get over here, under this blue line, we get some sort of mean reversion. So let's just assume you long right here. 95 out of 100 times, when I buy this, I'm gonna get some sort of bounce. It's just math. Look what would have happened as we move up. Look at the bounce that came after. And now look where we are. If you had just blindly followed the current, you take all emotions out of it, and you say, I'm going to trust the statisticians. You would have bought Dow Jones somewhere down here under 30,000, depending on how you want to measure it from absolute top to bottom, 20% move. We also have multi-time frame alerts. You don't even have to be at your computer on TradingView. You can ping your phone. Now, the current has some really awesome features, and I would urge you guys to join our Discord to get access to it. We give it away for free as a tool to the community. It's just math. There's really no need to overcomplicate things, not even in the slightest.